Hey everyone, John Henry here, Slingshot Futures Trading Group. Welcome back. Hopefully you're having a great weekend. Hopefully you've had a great week of trading behind us, behind you, and going into the week ahead. This one's going to be the weekly outlook for futures, stocks, and Forex going into the week of 8/16. This past week was a little grindy on some markets and a little bit ballistic on others, so there's plenty to talk about. So let's jump straight in here. First up is going to be the S&P. Now, the S&P has a very nice channel working its way higher. It's a very consistent channel. It's very straightforward. There's not a whole lot to it. There was a little bit of a break earlier at the highs, but very strong signs of bullishness when the buyers held the lows of that channel, and we continue kind of chugging along our merry way. The high still seems to be in the same location, which is what we're back in, and it appears as though we have an impulse measured leg to the upside. Now, if you're not familiar with what an impulse leg is, I've got a YouTube video on that, but impulse legs go over this move, a very strong unidirectional move where we've got 1, 2, 3, 4, 5, and then 6 technically for the fifth top bar there. So we've got a 5.5 bull bar string to the upside, and these are daily candles, so that's a very strong rally up, and a lot of times those extremely strong rallies up will show up again later on, and that's what we're at right now. So not only are we at an impulse leg high, we're also at the channel highs. There's a lot of things that are saying we're getting a little bit overdone up here. That's not to say that the market can't break out to the upside. This could definitely become a multi-tiered channel, and we start looking to expand out back up towards the 3,500s right now if it went straight up there. So plenty of interest in a little bit more continuation up. It's just a matter of whether or not the buyers are going to keep this going. It's grinding. We've got bear bars now. There's dojis. We're having a hard time up here, and it makes sense. This is a big zone of resistance. If they can start cracking through it, then maybe we can go a little bit further. Next up on the list is going to be the NASDAQ. Now, the NASDAQ, we've got a very interesting situation here. Repetitive pattern all over the place. I mean, this thing is repetitive, and it makes repetitive look repetitive. This has been happening for a while. Same channel that we saw in the S&P as with most indexes, but we've got this super repetitive bull leg to the upside that just keeps showing up over and over and over again, and it looks like that's what we're hunting for again. So even though we've had this nice consolidation, I'm sure buyers took profit into the highs of this, sellers maybe even trying to fade this back down. We've now broken higher. If we can break to a new high, and that's going to be the key, because right now we're sitting on a lower high with that weakness we were talking about in the morning brief a couple days ago. So knowing that there's some weakness coming in here and we're starting to kind of poke through the underside, every time previously we've had a lower high that actually triggered, that day was typically pretty bearish. So that doesn't mean that it can't reverse, but we're not in a good location for a reversal unless we get a big dump to the downside. So that's kind of what we're looking at right now, where if they are able to trigger underneath this bear bar, then chances are we're going to see it slide off a little bit further, at least initially, unless we can get down into that support. Right now, upside objectives are still up there at the measured move, but that measured move might have to change depending on where it actually shows up. If they can get a little bit of a deeper move, major support back down to those 10,500s. Massive support there. The last time the market was there, man, it hung out there for the better part of July before he finally got higher again. So if that can pull back, definitely a zone of interest that I'm going to be keeping my eyes on to see if we can bounce back up. Next up on the list is going to be the Dow. Now, the Dow, we don't have that same type of channel that we saw in the others. I mean, I'm sure if we tried hard enough, we could make one fit inside of here. But realistically, aside from the obvious kind of movement that we've been getting on the other markets, more so on the Dow, we've got a very apparent wedge. And that wedge has finally broken to the upside. I'm not really a big fan of taking the first breakout of the wedge. Typically, just like a range, the first breakout tends to fail. The big caveat here is we're talking about the U.S. indexes that have been ripping higher, and the Dow, along with the S&P, have not been at all-time highs like we've seen on the NASDAQ. So they've got a little bit of a catalyst to try to suck them a little bit further up. But again, this is a very difficult point of interest because buyers are kind of forced to buy really high. The moving average isn't even close. We're way far away from that. The previous swings, I guess we've got inside there, but I mean, second leg buyers looking for another move up are going to be buying in here. It's just, I have a really hard time justifying it that high up. I would much rather see a deeper dip back into the wedge where we can get back to where we've seen previous defense. That way, at least we know we've got some backup if it doesn't want to give us a bounce straight away. So I like it a little bit further down here, but as far as the overall movement goes, we've just completed the third leg of a very repetitious move. We've got the nice first leg up after that bounce, then we have the secondary leg, which took some time, but it did end up completing, and then we've got that third leg up, which just hit, and now we're going a little bit sideways. Sellers aren't proving a thing yet, and buyers still have a lot of context, so again, it wouldn't be a surprise to see a short-term secondary leg, but I think it makes a lot more sense to look for that deeper dip. So looking to be a little bit of a bull on shallow dips, but I would much rather see something a little bit bigger to give us something to play with here. All right, now we can move over to the stock side of things. First up is going to be good old Mickey D's, McDonald's, symbol MCD, that's Mike Charlie Delta. I better not say that too loud or my kids might come running in here. We've got a very strong move to the upside. They are doing phenomenally well, and there's a lot of really, really good bullish continuation to the upside. The thing that's going on with this strong leg is that this is still potentially all part of the same leg. We haven't really pulled back a whole lot. So although there is a buying opportunity right bang at the highs for a breakout back up, that would be a breakout up to 210 to kind of finish the move off. But the preferred area of interest would be a little bit further down. Maybe see them poke their head up, maybe even jump up in towards the target area and then give a little bit of a dip. But I would like to see a little bit more of a pullback if possible. We are in an area of interest, though, that buyers will be coming in looking for that break above. Now that we've gotten above 200 so decisively, see if they can get up to 210. Next up on the list, we've got Disney, now DIS, Delta India Sandy. Disney has also been doing pretty good given how things have been going. They've obviously suffered, but we are seeing them come right back up again. And it kind of, similarly looks like the index markets, where we've got sort of that little inside bull channel to the upside with a slight poke outside of it. So this is a very similar situation to a lot of the indexes, just a little bit lower down. The big thing here, again, is that it's kind of forcing buyers to buy high. And there will be continuation buyers. We have a big gap to the upside. Buyers are going to be looking for another leg up if they can get it. So there is definitely a reason to believe that buyers are going to be pretty aggressive here. In fact, we've had 3 bull bars back to back, and they've been moving down. Keep that in mind, right? You'd think these would be bear bars. Those are bull bars. It's gapping down and then getting bought back up again. So buyers are obviously interested. If it wants to dip a little bit further back, though, aside from the more what I would consider aggressive continuation buyers, sub 130s, looking for a pop up to like 135 to 140, you've got that deeper gap fill, and jokingly calling it the BTFD, where they're coming back to that gap fill, and there's a huge amount of support back here. And notice what happened the last time this occurred, when they broke away from that gap zone. They came back, bounced off of it extremely hard, and now we're ripping up again. So this is kind of a very similar situation where we've got a big gap up and we've got more continuation. If they can pull back, then I'm looking for that deeper dip to get down towards the area of interest, and from there, that's where we can see if they want to rotate back up again. Disney looking very good here, but I would prefer, aside from being very aggressive, another one of those deeper BTFD type setups here, but definitely on the watch list. And then the last one on our stock list is going to be PayPal, PYPL, Papa Yankee, Papa Lima. Very good movement overall to the upside, not really surprisingly. It's been doing incredibly well. One of those markets that's actually flourished quite a lot because of all of the world falling apart. Well, you need a way to pay people, and PayPal's a pretty easy way to do that when they're across the world and you can't travel. So obviously there's a lot of bullish movement to the upside, but the big thing that we haven't seen yet is a little bit more of a pullback. give us a little bit of a deeper dip. We haven't gotten one yet. Now, there are a few caveats as to if we are going to get it, I'll be definitely interested, but I'm not necessarily expecting one, which is why it's showing up on the list a little bit early. Because the last time we had a big gap and run type move, the market broke up and ranged out for quite a while, and when it broke out again and came back to that zone of interest at the lows, it was massively defended and it never came back. Now we're seeing another gap away move that is trying to defend the lows of that area, and although it's not as clean as the last one, there's a definite reason to believe that if buyers can come in strong enough, we'll get a bounce early off of 190 instead. Now, if they are able to break through, we have a nice measured leg to the downside, which gives us our better support in the area that I would be a little bit more interested in, just, BTFD mentality this weekend, it seems. Trying to get down towards the 175s would be a much better area because that would get the sellers out of the way. That would complete the ABCD to the downside. That would get the market back into supportive structure. Everything comes back into alignment with a little bit further movement down on PayPal. All right, now moving over to the Forex side of things, we've got the Euro USD, which is still kind of stuck in that same zone of support resistance we were talking about before, that wide open door. We're back again for the 7th or 8th time now over the past week and a half, 2 weeks. We just keep kind of pinging off of the lows of this area. It seems like there's quite a bit of, not necessarily resistance, because if there was resistance, it'd be pulling back further. This is more likely just profit taking at this point with a giant rally to the upside. And given how many things are completing up here, it makes sense. We've got a measured leg, a wide measured leg, which is completing. We have the shallower measured legs, which are completing, and we're on top of that major zone of resistance right ahead of that 1.2. I mean, there's a lot of things that are all layered up here that, although aren't pointing to bearish, are saying that we're probably going to keep going up, but the direction that we go up is going to start getting weaker, more likely a spike in channel at this point, unless we get some serious legs to the upside through this 1.19. So I am still obviously looking for bullish continuation. We've got a nice little wedge formation that's going on here. The one thing that's kind of an issue is that we're at a zone of resistance and we're forming a bullish pattern. A lot of times during that confusion, the breakout move doesn't go as far up. Again, more supportive of a weaker bull trend rather than anything else. So if we are going to break out to the upside, I'm not necessarily looking to hang on to it for ages. It's more likely that it's going to pop up and then back off. And then if it does back off, and it backs off a little bit more aggressively where we get a nice pullback, back down into that support zone from before around 1.13 would be a major zone of interest for some definite continuation back up again. Moving on over to the dollar yen. The dollar yen has some pretty good movement to the downside. We did find those potentially trapped sellers we were talking about last weekend. That break-even zone was missed. Any shorts that were still in will likely liquidate, and that caused a continuation pop to the upside. The continuation pop, though, didn't go all the way up to where you would expect them to go. I mean, yes, this is a downtrend, but realistically speaking, when we have that much of a trend, if we are squeezing these sellers and we're making them nervous, you'd expect an ABCD move up wouldn't be that difficult. Now, this is only really the first time that they've pulled back off of the highs, but it's not necessarily just that it's the first time they've pulled back, it's the fact that we came back up into this previous area of, well, was supposed to be support, breakout, hold it, is actually acting as resistance, and there's a lot of resistance here. So that's kind of taking away from the bull's case, where if they can't hold these continuation buy supports, this might be one of those situations where we're going to come back down and challenge that area again. Buyers would obviously love to see a higher low, so if we can get some really good support, sub 105, get some nice bouncing off of that, then we can look for another move up. Otherwise, we've got the aggressive buyers who are going to be looking for that ABCD type move to complete. And because we're pulling back ahead of that, this is nothing more than just a smaller one, right? A smaller ABCD, and everything is still pointing to the upside. It just makes me a little bit nervous seeing this heavy of a bear bar. If this is supposed to have a lot of bullish context, why did the sellers push back that hard in or out of, in this case, a zone of interest? So I'm a little bit weary about the higher zone unless it gives us some good reason, good traps. Otherwise, I would be much more supportive of the bigger dip down towards that 105, well, anywhere inside of here, really. Just sub 105 at this point. And last on the list is going to be the dollar CAD. The dollar CAD is in a little bit of a funky situation here. So starting from, well, I guess we'll just start from the left and work our way forward. We had a big gap up, and the market just raged to the upside. It's very, very likely that buyers were anticipating a second leg up. And they were buying low, right? That's what buyers do. They buy low so they can sell when it's high. They're trying to buy low, trying to buy low, trying to buy low, and it's just not going. Then they start putting in, right, weak highs, double tops, lower highs, even lower highs, and then we finally broke out. And that's a breakout in the opposite direction that a lot of traders were expecting. A lot of people were expecting a bullish continuation, and that failed. So knowing that those accumulation buyers are potentially stuck or trapped, it's likely that they're going to be waiting for the market to form two legs down before doing anything. That's almost always the case when traders are surprised. You've got that initial jerk reaction, and then it starts coming back, and people start figuring out, wait a minute, what the heck just happened? Let's reposition and kind of get ready for this. Okay, well, maybe it's coming up. No, it doesn't look like it's coming up. And then it rolls all the way back over again, and we form another zone of interest right here. So we've got sellers who have an accumulation sell side, which is working perfectly. And all the while, we also have stuck buyers who are on the wrong side of things. You can kind of feel the pain here. So it wouldn't be a surprise at all to see this maybe jump down and squeeze down to the big 1.3. It is a big psychological level, and we're not too far from it. And this breakdown happened kind of, a little bit underneath it, but happened through that 1.4. So if they are looking to cycle from big number to big number, it would make sense to see them go down, and the measured move kind of confirms that location further down as well. There are a couple other things that stand out here, of course. We do have that horizontal support, in this case, is now broken and is acting as resistance. And we have a descending kind of little wedge/pennant formation going on down here, more of a wedge. And this is giving us a very repetitive move. We've got the first leg down, second leg down, third leg down, fourth leg down, and all of them are almost identical in size. The only caveat being the fourth leg down hasn't quite made it all the way down yet, and that might show signs that buyers are even a little bit more aggressive. They're not even letting it go all the way down before buying it up. So there is a small caveat in that if we don't complete this move down to 1.3 and we start seeing signs of bullish breakout movement back up, they're going to have to get back above this horizontal support and maybe even break a new high to invalidate the accumulation sellers from here. But if that's the case, we can get a nice little inside pullback and a rally higher. For right now, there's not a lot to do, more just watching this as a possible three-press bottom, maybe a rotation back up or a strong breakout or flush down to 1.3, but really need to see a little bit more from the dollar CAD right now. All right, so that's going to do it for this week's outlook on the future stocks and Forex side of things for the week of 8/16. As always, I hope you had a great week of trading. Hopefully, we have a fantastic week ahead of us. A lot of the volatility still seems to be hanging out on the NASDAQ, so the NASDAQ is probably going to be the big focus again, as long as volatility stays high. But there's plenty of opportunities in these crazy markets. You just got to make sure that you're waiting for the right location, and then you're good to go. But anyway, that's going to do it. If you have any questions or anything like that, feel free to shoot me an email, jhb@ssftg.com. Otherwise, have a great rest of your weekend, and we'll see you members back on Monday. Have a good one. We'll see y'all then. Thanks.